5:40 a.m. Pacific Standard Time. Today's date 9/14, April 13th through, or I'm sorry, September 13th through September 17th is a options expiration week. What we're going to show here is two weekly charts. One is called the S&P 500, which I already did at these major tops. You're going to have a closing price, and you're going to have to hold that closing price for a number of weeks to have a true new secondary bull rally. If you cannot hold that price on a number of weekly moves at that price above 1120, you're not going to 1200 up here to the 200 week on the S&P. You're going to have to take out these major double top reversals where we relevered, reversed. We relevered, we reversed. On the other charts, I already talked all about weekly moving averages relative to sustainable bull trends versus bear trends. The most important thing is the opposite end of this is called the volatility index, the VIX. We are coming down here and testing where when we were shorting markets before and people were being taught in the SMF Street School, you went. When you got complacent, you broke out on a weekly basis. You pulled back here, you hit that 200 week and you broke out. The lower that this goes is where market corrections happen. That means that there's no fear. What we are going to be watching for on the VIX is this weekly bar that was put in on 425 when we called the market top and that we were going to reverse hard. It was based on this lateral weekly area of complacency, no fear, everything is wonderful. But guess what happened? Not only did you break higher off of that, you also have that nice May capitulation in here. If I don't break that and I set up on a weekly basis, the lower it goes, the less complacency. That means that S&P is going to have a hard time taking out these tops. Here's another top right up there on the S&P, and that's going to be slightly, it's going to have to get above this bar. This price action right there is where we had called that reversal. You've come back up mathematical ranges. 3-week reversal here, 3-week reversal there. So what? What are we going to do now at resistance? What are the earnings season going to be like? Once you get out of the options expiration, it's going to be quite different. The more complacency I get here, and if I hold here and I do not break below that trend line and I do not close above there, then that means that there will be another trend cycle around the corner between the bear and the bull. And at that time, like always, we'll be monitoring where the bull ETFs and the bear ETFs are relative to the top end of the resistances here. Remember, you can go up through resistance. The key is you've got to consolidate price action above it. So if we consolidate down here and we start to set up, then we're going to go higher there. And if we go higher here, when that time comes, we're going to go lower here.